Good morning. It's Jeffrey Christian of CPM Group. It's about 7 minutes after 11 o'clock in the morning on Tuesday, the 3rd of September here in New York. I want to talk about gold, silver, platinum, palladium, the ultra short-term outlook. There's a great deal of volatility in the world right now, politically as well as economically, and it's been obviously affecting precious metals prices. And we think it's going to continue to affect precious metals prices, and perhaps even more so in the coming 8 weeks, 2 months, 3 months, and into 2025. Right now, as I speak, the gold price is around $2,509 for the December COMEX futures contract here in New York. It got as low as $2,504. Silver is trading around $28.17. It had fallen below $29, and it actually got down as low as $28.06 earlier this morning. Platinum and palladium have also sold off. Platinum's off $28 at $9.04, and palladium is off $36 at $9.28 as I speak. So you're seeing the continuation of the volatility. At CPM Group, we have had, in terms of our ultra short-term trade recommendations, we have had stand-aside recommendations for gold and silver for several weeks now. And at least for the last 2 weeks, we have added a stand-aside to platinum and palladium. We're changing that now. We're issuing new trade recommendations today. And for gold, our recommendation is to continue to stand aside. Our assumption is that people who listen to CPM Group have a core long gold position that they don't change based on these 2-week ultra short-term trade recommendations. And what we've been basically suggesting to our clients and others who listen to us, that they maintain those long-term positions, but with gold at record prices, maybe you shouldn't be adding to your long positions at this time. Our expectation is still that gold prices and silver prices will rise sharply over the next 4 months from where we are now and into 2025. So we can understand the impulse to add to those positions, but hopefully you are, like I am, well positioned with a long position that was established long ago at much lower prices. I wouldn't necessarily chase the prices higher right now on a short-term basis. Gold prices have traded between $2,300 and $2,570, within the range that we have laid out 2 weeks ago of $2,300 on the downside, $2,575 on the high side, and we're maintaining that position. We are changing our silver, platinum, and palladium positions with moving away from stand aside to directional buy and sell recommendations for each of those metals, depending on what each metal is. Now, I was looking at our video on Friday, and on Friday we talked about gold, silver, platinum, palladium, and price inflation, consumer price inflation, and what the CPI is and such. And in the commentary since last Friday, the 30th of August, there were so many inaccurate statements about what inflation is, what the CPI is, how the CPI is constructed, what goes into the CPI, what doesn't go into CPI. One person pointed out that if stocks, bonds, and precious metals aren't in the CPI cannot effectively measure consumer price inflation, which, is not accurate. Stocks, bonds, and precious metals are not consumer goods or services, which is what the CPI measures. They are investments, and investments are not consumer consumables. So, no. Now, I thought I could easily spend several videos trying to clarify some of the and correct some of the misstatements and misunderstandings about what the CPI is and how it's constructed. But that's not my job. Yeah, this is not a public education system. At CPM Group, we're actually a commodities research and consulting company. Some clients will pay us to help educate them on what the CPI is and what it means and how it's constructed. But I don't want to spend time on that today. Instead, I want to talk about the precious metals markets and the ultra short-term price outlook, because there is a great deal of political uncertainty, obviously within the United States. The presidential and congressional elections coming up. There's a tremendous amount of misinformation and disinformation and misstatements and purposefully lying going on by some of the campaigns. It's outrageous. It's not unusual. It's not surprised. I guess the degree to which it's happening may be unusual, but it's a symptom of the time. And it's a symptom of the fact that since the 1950s, there have been various groups within the Republican Party that really don't want public education. Yeah. Ronald Reagan ran in 1980 on a platform that included a plan to dissolve the Board of Education, Department of Education. And it's not surprising that the Republican platform this year also says they want to shut down the Department of Education. And it's also not surprising that the Department of Education has grown in leaps and bounds under various Republican administrations. The Department of Education's budget had doubled in the years of the Reagan administration rather than shutting it down because, hey, these are good paying Republican jobs. So there's a lot of information and there's a lot of misinformation. There's a tremendous amount of volatility in the U.S. electoral period that we're now entering in. People talk about an October surprise. We think there will be several September and October surprises coming from both campaigns, both camps. And we think there also could be some very interesting and very monumental and important October and September surprises coming from outside the political system, from Israeli politics, from Russian politics, and from other areas. There could be a tremendous amount of accurate revelations over the next 2 months, as well as a tremendous overload of misinformation and disinformation. And that is going to create a tremendous amount of uncertainty and volatility in the U.S. political process. In addition to which, there are all those things that I just mentioned that are international political issues that could become very volatile. So our view is that gold, hopefully you're long, and I might not necessarily chase prices higher right now. If I saw the price come down below $2,500, it got down to $2,504 today already. If I saw it come down to $2,420 or $2,400, I would possibly be a short-term buyer, but I would understand that I'm buying at record or near record prices. So it's something to be a little bit more cautious about. Now, I mentioned volatility, and I'm focusing on economic and political volatility. And there are several economic data releases this week that will be very important. At the end of the week, the U.S. jobs report will come out. The last one for July was very disappointing for a lot of people, and it had a major impact on stocks, bonds, and precious metals prices. If you see another very weak jobs report for August, when the data is released at the end of this week, that could also drive the prices down and could drive them down sharply. So in that kind of environment, $2,400 is possible. Even lower prices are possible because that volatility is there. Now, if you look at actual gold price volatility, it's up, but it's not unusually high. You can see the data on the right. In July, the gold price volatility was 17.8%. In June, it was 19%. That was more than double what it was in July 2023. But if you look at the chart, on the left, you can see that it's within a normal band or a highly common band of volatility between 10 and 20%. So we're at the high end of normal volatility in gold. You can see there are numerous times over the years where gold volatility on a monthly basis has spiked up to 35, 40, 45, 50% in a month. That's possible over the next several months. And it's possible, quite probable, perhaps, over the next several months. So we're looking at a volatile economic and political environment that flavors investment demand, which flavors and determines gold prices. And in the current situation, we're saying, okay, we've already seen some increase in volatility over the last year. Our expectation is that we'll see increased volatility in gold prices over the next several months. Silver prices, they did get up over $30 in July. They came down and they fell below $28 in early August. They came back up to just over $30. And as I said, we're down below $29 today. We got down to the low $2,800 range. We expect the silver price to rise in the longer run, but over the next few weeks and months, we wouldn't be surprised to see the price come back off. Part of that increase in August was a reaction to the low prices in early August, but part of it was also the role of the September contract, COMEX contract, forward, and that applied some upward pressure. That was over as of August 30th, and the roll is pretty much behind the market now, so you're seeing prices come off. And we wouldn't be surprised to see the prices come off even more over the next 2 weeks. Silver price volatility, again, similar to what we're seeing in gold, much sharply higher volatility compared to a year ago, but again, kind of within the normative band of volatility that you expect to see. Now, obviously, silver prices are much more volatile than gold prices. That's a well-known fact that borders on a belief in the silver market, but the reality is that it is true, and a normative band might be between 10 or 20 on the low end and closer to 35, 40 on the high end. And you can see here 32% in July of 2 months ago and 45%. These volatility charts and data, by the way, are from our August Precious Metals Advisory, which comes out in early August and has the July data. We will have a September Precious Metals Advisory coming out yet this week, and it will have the August data. So if you really want to stay on top of this, you ought to be a subscriber to the Precious Metals Advisory, because we have this data in there every month. Briefly, looking at platinum and palladium, as I said, platinum has come off some. We wouldn't be surprised to see a little bit of a rebound in platinum. I think it's oversold right now on an ultra short-term basis. And then palladium has also come off, and our expectation is that the palladium price could continue to come off a little bit more over the next few weeks. So that's sort of what we're looking at. We're looking at a world that is extremely volatile and is likely to continue to be volatile, with increased volatility in the political realm, probably in the economic and financial sectors of the world, and also in terms of precious metals prices. You can go to our website, cpmgroup.com, and read more free reads and more free videos. You can buy our gold, silver, platinum yearbooks. You can subscribe to the monthly Precious Metals Advisory. You can send us an email at info@cpmgroup.com and say, hey, I want to talk to CPM Group about ways you could help me. Insofar as we have had a lot of people do the latter in the last few months, and I have been slow to respond. I'm sorry, but these are extremely busy times for us. We have a whole list of people to whom we need to respond, send proposals, send draft contracts, and we're working to try to catch up with the number of people who really want to use CPM Group to help them protect and profit from their price exposure to gold, silver, platinum group metals, and other commodities. We'll be back on Friday. In the meantime, take care of yourself, take care of those around you, and try to do something good for the world. And we'll talk to you in a few days.